Friday, everyone. I'm Elizabeth Copeland, junior trader here at Verified Investing. Now, if you follow Market Mavericks, you'll probably notice we're on a different day. Usually we're on Thursdays at 3 p.m. Eastern on our YouTube page, Verified Investing. But today, Friday, a very special day because we are live from the Money Show in Orlando. And before I introduce our three Mavericks, I do want to say to everyone in the audience, if you have any questions, be thinking of them throughout the show, write them down, and at the end, you can come up and ask your questions straight to our Mavericks. So you've got one-on-one conversation that can happen. So that's going to be awesome. So write your questions down, be thinking of them. All right, so I'm going to jump over to the Mavericks. First, we have Mike McGlone, Scott Melker, and of course, Gareth Soloway. I'm going to leave it to you guys.
Wonderful. Thank you so much, Liz. Appreciate that. It's great to be here from the Money Show. Thank you, gentlemen, for coming and joining me here to do this live. And I think today we have to really talk about a couple things. Number one, the biggest thing that stuck out to me, and I remembered it all week, was last week, or was it 2 weeks ago, when you said, sell everything.
8 days ago.
8 days ago, sell everything, all right? So since then, we've seen a big drop in the stock market. We saw that big down day a week ago on Friday. We haven't had a lot of downside since then, but gold looks like it's starting to pull back. Silver's down 5% today. Can you fill me in on, like, for a lot of people out there, you saying sell everything, especially including gold, is a little bit of shock. It's like, being punched in the face. So can you tell us why you said that?
Let's start with a chart. And then can I get up and show this one?
Please
That's
do.
Awesome.
Please do.
It's not the kind of thing you say reluctantly or just casually, but this is a chart of gold versus its 40-month moving average. You can do it versus its 50-month, its 60-month. My colleague Tom Keene would say it's like a fifth, sixth, or standard deviation move. This is where we are now. Ignore why it's there. You should never really think about why it's there because that's kind of distorts. It's just, you got to go back to that period in the early 80s and late 70s, early 80s to be that stretched from its 40-month moving average. And I look at this and I say, yeah, okay, it's been lucky enough to be overweight gold. Some of us have been lucky enough. You don't want to be a buyer here. And also now it's in the tape. I was at Greenwich Economic Forum last week and everybody's talking about it. I'm like, okay, it's just, you put it, Scott, the word I learned from Scott, my spidey senses, you be careful. And if gold's got a problem, I think everything's got a problem now because everything's so expensive. So that to me is one key reason I was willing to say that, because when you can go back almost 50 years and see things that this stretch, just like, yeah, all right, thank you. Just, it's also a key lesson I've always learned in the business is never, the essence of taking profits is the essence of the business.
When you say sell everything, would you that include bonds, or
no,
do you think
that's
you
the only
buy
thing
bonds?
left.
Okay.
So for years we've been talking, I've been talking, been kind of not a big fan of the stock market. But there's alternatives. Bitcoin and cryptos were a great alternative. 2020, when Michael Saylor got bullish, and 2018, when it went down to 3,000, okay, we all jumped on. A lot of us got 10Xs, right? Now, the masses are in the space. The people, I was at Bloomberg, and Bloomberg, everyone was asking me about it. You get in the terminal, people are asking, hey, Mike, what's this Bitcoin thing? Now I have retail people asking me, what can I buy? I'm like, okay, that's kind of saturated. So that was a good thing, alternative to the stock market. And then gold, as of last couple of years, to me, gold was a great alternative because it just looked like it was ticking up and stock market's getting expensive. And now it's too expensive. So I look at the only thing that's really left in my view is a normal deflationary cycle. And that means long run.
So just going back to this chart here, explain to us, so the bottom, the yellow line is gold, that's the spot price of gold, and the upper one, what's the upper blue?
So they're both gold.
Okay.
This is all you do is you take gold and divide by the 40-month moving average. And I use 50-month and I use 60-month. But when I started doing this a few weeks ago, this was the only one that extended above that peak from 2011. Every one of them is above now. So I just figured I'd show you this one. And so also I show gold on a log normal scale. So look what happened here. Now it got here, it went higher. This was around 300, went doubled around 600. But that high lasted for 20 years.
Wow.
So here we are now. That peak 2011, we got there, went a little bit higher. But then the peak here lasted for about 10 years. It's just not the place you want to be overweight gold.
Gotcha. Look at that, you just killed the charts.
I know, here we go.
All right, speaking of gold, I'm going to jump up. I want to show you this, and then I want to get into crypto and Bitcoin. So for those of you guys that have been following, we've seen this epic run in gold, right? So here on this side, this is your chart of gold currently on the weekly. So this is you have this up move here. This was your first move starting in early 2025. We then went into our consolidation phase, and we've had a run higher. Now, this is where things get really interesting. We go back to 1979, right, and 78, and look, same exact pattern formation, consolidation, right? So you have your up move, consolidation, which matches this consolidation here, and then you have this move. Now, what's interesting here is guess how many candles up gold had in 1979? How many weeks, essentially? And the answer is 9 weeks. Well, guess where we are right now? What number week is this? 9 weeks. All right, so now what's interesting here is we say, okay, well, 9 weeks. Did it continue? Let's find out. Let's go to this chart here. And the answer is, look at what happened on the 10th week. Look at that reversal right there. And so the idea here is, number one, it's matching 1979 pretty clearly into 1980. We get this reversal. And then the second question I always think about is, all right, well, I think gold is a long-term buying opportunity when it pulls back. And the reason is in the 1980s, we obviously had massively high inflation, but that was dealt with. You know, you didn't have the U.S. debt as crazy as it is now, where we see the politicians not being willing to deal with it at all and just spend. And so ultimately, while this was a major pivot top on gold, and obviously we went much, much lower, my guess is we'll still see a pullback, but it probably then over here pulls back and eventually goes even higher. Last thing I want to show you is this. Check this out. So we think about it and say, okay, well, where's your proper buying opportunity? Because listen, someone can tell you something's overvalued. The question is, well, where do we start to buy? And the answer here is, if we look back, this up move here and this consolidation, take that high right there and look where we pulled back to, right there. So using that same thought process, we say up here, there's your high. When we pull back right there around 3,500 or so, that's the likely area, at least for me, and I can only speak for myself. Where am I looking to buy? I'll be looking to buy at around 3,500 on a retrace, which honestly is a pretty darn big move. All right, so I just wanted to show you guys that. I thought that was really interesting how you had similarities from 1979 to 1980. Now, we got to talk some crypto. So crypto had a crash, Scott. What do you call it? We call it a mini crash?
Leverage liquidation event.
Okay. Leverage liquidation event. Now, number one, is this partially because there's so much leverage in the system? People are using like this crazy, like 100 to 1 type stuff, and that creates these type of events, or?
I think that's a huge part of it. I don't know that there's net more leverage in crypto than in other markets. I think it's structurally different because of who has access to the leverage and on what platforms they have access to that leverage. So obviously, if you take a look at what happened, people will tell you that the catalyst last Friday, a day after Mike said to sell everything, the catalyst was Trump's truth or tweet. Do we call them truths? I call them truths. He truthed. Trump truthed and said 100% tariffs on China, not talking to Z. Well, we get that once a week. So that's clearly not a catalyst for the largest liquidation event in crypto in history, 12 times larger than FTX, to put it in perspective. 19 billion to 20 billion in less than a day. Now, if you include this week, 21, 22 billion liquidated. FTX was about 1.6 billion. And that was the collapse of the most notable, largest platform in the space. But what basically happened was market makers, algorithms, exchanges, stop losses, everything broke. So there was a level of stress that was put on the system. You think they would be prepared for black swan events. They're just, if a black swan event happens every year, it's just a swan. And this happens in crypto every single year. There's nothing black about it. And you can't handicap your risk on an exchange like that if you can expect that this will happen every 1 to 3 years. So what you ended up basically having was literally the prices of certain assets in crypto going to zero. Actual zero. They bounced, but we all know that nobody was able to get on an exchange and buy that.
That's what I heard.
Zero.
That's what I heard, that people were like, why I'm trying to buy, and they couldn't buy.
And you know what happened to me? Everybody was texting me, wow, the market's really crashing. And I looked at Bitcoin and I said, it's down 2 or 3%. Like, what are we talking about here? I checked Ethereum, Solana, roughly the same. And then the next day I started seeing the tweets on Saturday morning that people were killing themselves and that millions of people had been liquidated of everything they had on all these exchanges, even when they had stop losses that didn't fire, obviously, because there was no orders on the book. And if you were sitting in Bitcoin spot, it was just another week. If you were trading with leverage on one of these venues, you lost everything, right? So I think that this was more of a failure of the infrastructure than an indictment of the space itself. And Bitcoin, maybe right now sitting around 107 with a high of 126. This is normal chop, right?
Yeah,
I think Bitcoin above 100, testing the 200 MA now on the daily. I don't think any of this is particularly problematic. It's a really sad scenario, but if you were trading any of these assets spot, you're not down that bad.
So does this type of event, does it hurt the adoption of crypto amongst retail investors at all? Or you think it's not any, Bitcoin in all fairness, yeah, it had a drop, but it wasn't that, like even from peak to trough, I'm looking at it on the chart over there. We dropped from 120,000 to 110 basically.
Mainstream retail has no idea that this happened. And I can tell you that anecdotally because I got all the texts from my friends on Monday morning when they checked the market and they're not crypto native. My Wall Street buddies who are $112,000 Bitcoin, great, let's buy it. They don't even know that happened. It wasn't a mainstream news story. And unfortunately, if you've been in the crypto market for a long time, it's very player versus player. And there's a cohort of people that participate in that market that just crush each other and get liquidated and go broke and come back. And they do it every 2-3 years. And there's washing machine cycles. This wasn't the same investor who's coming into Bitcoin and adding 5% of IBIT, BlackRock's ETF into their portfolio. These were all over the world, but primarily South Korean, Chinese traders who are incredible degenerates with volume. South Korean crypto trading volumes are beyond comprehension, who have been beating up on each other and, somebody saw an opportunity and took all their money again. Right, so there's actually bigger stories. Crypto industry, if you've been a part of it, you know that there's nothing more predictable than them loading the shotgun, aiming at their foot, and firing when things are good, right? We just have an ability to destroy ourselves in a way that no other industry does. This week, I don't know if you saw the story that Paxos, who's an issuer of stable coins, accidentally fat-fingered a $300 trillion mint of PYUSD, which is PayPal's stable coin. Now, given they were able to reverse that on the ledger very quickly, but when you have the entire world looking at stable coins and you have the Genius Act, which is supposed to regulate these, it makes you think, how can you mint 300 trillion if they don't have $300 trillion in the bank? Shouldn't there be a mechanism that doesn't allow you to mint more coins than you've already put to back them when they're one-for-one backed assets? And Paxos is one of the most highly regarded and very serious players in the stablecoin market. So I think it just speaks to the fact that this industry is still nascent and growing. But when it comes back to the original question of markets, you look at that Bitcoin chart and it's fine.
It's not, overall, it's not. It's a drop, but it's not.
Looks pretty bad
ridiculous.
this morning.
Pull up a 200-day moving average is going up. We just went to the 200-day moving average. As a disciplined trader, aren't you supposed to buy that?
We're probably sitting on the daily 200 right now, which is, I don't think we've been below it since April. The bigger story on the weekly chart would be that Bitcoin is currently, it went about $1,000 above the weekly 50, which is about $101,700, and it hasn't been below that since March 23. That's bear market stuff. If you start closing weekly candles under 100, under 101.
You see where that crosses 94? That's unchanged in the year.
Yeah.
Interesting on that. So now, one of the things, speaking of stablecoins, that I was hearing was that stablecoin issuers are starting to buy gold. Did you hear that? Is that anything there's truth?
Tether has a very popular gold-backed stablecoin and gold. And products
but they're
that are
different.
Like that.
It's not
I have
Okay.
not seen that there are stablecoin issuers buying gold for their treasuries or anything.
Oh, okay.
Tether has a massive Bitcoin treasury.
Gotcha.
Listen, everybody's interested in gold. Bitcoin people and gold people are exactly the same, unless you ask Peter Schiff. But they're exactly the same.
He was here. I saw him.
I had him on my show on Wednesday. He's one of my
Completely
favorite
agree
people
with
to
that,
argue
Scott.
with.
Gold bugs are very similar.
Everybody, they agree on everything about the reason to own the asset.
Right.
They just stumble at the finish line over which asset to own.
And they hate anyone who says opposite.
I had a podcast with Peter that I started. I said, Peter, we agree on almost everything. Can we not talk about Bitcoin? Let's talk about all the things we agree on. We've got an hour. Let's talk about. He mentioned Bitcoin 749 times after that. We could not talk about anything else. It works for him. But yes, the people who believe in Bitcoin, the older ones were gold bugs first, and the younger ones are now getting very, very interested in gold because they see that it's doing all the things that Bitcoin is supposed to do as well.
Interesting. So turning back towards what we've seen lately in the economy, right? We saw threats against China. Markets got a little panicky because I think things have been so elevated. But, number one, we saw Trump, he couldn't even handle a 2.7% down day in the S&P before he backtracked. And is that concerning to you that is it that the stock market is that tied to the economy now that the politicians and the leaders of the world can't even handle this minor little down move in the markets?
Just quickly, Mike, I would just make the point that he might have been more concerned about what he saw happen to crypto on Friday night and not about what happened to the stock market because his family's wealth is inextricably tied to crypto. Eric Trump said yesterday that they've made over $1 billion this year in crypto.
That's what has changed. So in the earlier days when you guys got in a lot earlier than I did, and people got into crypto, a lot of the reason to get into crypto was to get away from the U.S. government, something that was independent, nothing to do with someone else's liability, completely independent trading, nothing. And I loved it when Trump hated it because he completely missed it. The main thing about Bitcoin and cryptos is crypto dollars. I mean, the technology is awesome. Stablecoins, just completely proliferating. So now when he tilted, the difference is so you could buy Bitcoin and cryptos to kind of be away from the government, away from the system, away from the traditional old school, like some of the boomers like me, I'm the last of them. Now, if you're buying Bitcoin, not only are you somewhat supporting, or not cryptos, the Trump administration, you're somewhat dependent on the Trump administration. My sense is the smart people who got in it early, the technical guys, and sometimes it's better to be lucky, are thinking, man, let's just get out a little bit. Every single rally, I think that's what they're potentially doing. And that's what we saw a little bit when the tide went out a little bit. We saw how much Trump was involved. So I think that might be a shift. But I'd like to focus a little bit more on the macro. Tilting over what you said. Let me show you a chart here if I can walk up and show this real quick. Hopefully it won't blink out this time. And you were showing Bitcoin. My favorite ratio is Bitcoin to gold. How many ounces of gold per one Bitcoin? That's what I show you here. There's no trend. Right now, it's 25 ounces of gold per one Bitcoin. The high, 38 here. The high when Trump got elected was 40. The low's been around, what are we around? 22 or so. There's no trade. But I overlay that with, this is the benchmark risk asset or risk off on a planet. The U.S. government 10-year note yield. It's bumping up at 4%. At the same time, Bitcoin gold is bumping up at 25. That's a key ratio. That was the low back in April. What's the difference? We bottomed here in distress. This is 90-day volatility on the S&P 500. It peaked at 28%. It just bottomed in October, beginning of October, at 8.9%. That's the lowest. You have to go back to 2020, 5-year low. So complacency in the stock market is the highest in 5 years. And this ratio is bumping on the bottom. What do you do as a trader? You're supposed to buy the dip, right? This is support. It bumped below it yesterday. It's back up now. This is live right now, and it's hanging out there. My suspicion is there's only one place for volatility to go, and that's up. You have to expect volatility to stay lower, or this is going to break down, and that's why part of the reason I was able to, willing to make that bold statement, sell everything, because I think it's going to break down. And the reason is, as an ex-option trader, when volatility gets this low, you don't want to be short it. You just want to either get away or look to buy dips, buy gamma.
So what you're thinking is volatility is going to shoot up?
We must shoot up, but the bottom line is, do you want to be short vol here? In October. No, maybe in June.
Right, going
but
into
October.
The summer. So what are you thinking are the catalysts? So whether we're seeing a sell-off in everything, right? Sell everything. The idea is that stocks are going to come down, Bitcoin's going to come down. Is there anything in particular that you're queuing on in the news that's like, this could be a major event here that we need to pay attention to?
Shutdown. So think of the shutdown. Mr. Trump is completely focused on this, completely emboldened by the stock market. We know that. Stock market goes up, he's fine. Stock market goes down, he pulls back 90 days on tariffs, right? The only thing I think that brings these two parties together is stock market going down. That's what happened to TARP. Remember TARP when Congress first rejected it, and then stock market dropped by 5%, and they came to terms. To me, that's the problem. That's part of it. But the key thing is, as a trader, as a strategist, I'm not so much worried about the catalysts. I'm looking at markets will find reasons to move when they get this cheap or this expensive in terms of volatility. They'll find reasons, and this is the time of year. Meaning little things can make things move. So that's the way I look at it, and just look at the relative value. Sure, as a trader, you're supposed to be buying, shorting that 4%, it's not supposed to go below, or Bitcoin and gold, you're supposed to buy it at 25. But again, it's the time of year. My bias is it's going to break down. It's just waiting for a reason.
Interesting. So, last thing I'll ask you is just in regards, and you can come back as we talk about the 10-year yield, right? So you're bearish on the 10-year yield. You think the 10-year yield is going to drop, and bonds are the place probably to store money at this point until assets come down significantly. Do you have a general sense of how low you think they could come?
China. So I can show another chart. I'll just do it from here. So one thing you have to point out is the most significant thing on the planet right now is how expensive the U.S. stock market. That's stock market cap to GDP. That's a Warren Buffett model that Mr. Saylor kind of made fun of because he's high overweight cash. You have to go back to 1929. Now I use the S&P 500 divided by GDP because it's relative, it's reliable data going back 100 years. But it is the highest ever. And overlay that was the Bitcoin to gold ratio. It's breaking down. It's a good leading indicator. The point is, at some point, something's going to trigger this. We have to stay elevated. Everything now in the whole world is dependent on the stock market staying elevated. It has to stay up. Or if it just drops a little bit, deflationary forces kick in. Crude oil is collapsing. And as I point over to one key indication is China, the second largest economy. Their 10-year note yield is 1.84%. In this country, it's 4%. So they have severe deflation. So it just needs a little trigger for that to kick in. That's why I'm worried. If like that line of that trend line you show in your chart, if we start breaking down, and you have to look at the tip of the iceberg. I'll point out the tip of the iceberg is Michael Saylor, MicroStrategy's rolled over, 200-day moving average has turned into a bear market, and the market's rolling downward, right? At the same time, this is the 10-year note, the bond future. I started in that trading pit. And this is Scott, you will know for sure. I've been wrong on this. I thought this was bottoming here. And I've been wrong for 2 years. But at some point, if the tip of the iceberg of risk assets, MicroStrategy, breaks down, everything tumbles. And bond yields are just waiting for an excuse. They're just waiting for so I'll end, I think the most significant thing to point out is when you get 2.3 times GDP, which is we are now, the stock market is the economy. And it's just waiting for a trigger for reversion. And maybe it's cryptos to lead it. And that's why I'm so on top of what's happening to cryptos.
I have a question for Scott. All right. Is MicroStrategies too big to fail?
Yes. But the rest of the treasury companies have already had their bubble pop. I think that MicroStrategy will be fine. I don't think it will trade at a discount, but I think that the rest of the treasury companies largely will. I think that if you mean by fail, could it trade at a discount? Yes.
No, I mean like let's say we know
if Bitcoin went to 30, 20, 10, yes, I think that's possible.
But I guess what I'm asking is
But last time when Bitcoin was at 30,000, people were saying if it went to 25, MicroStrategy would fail, and it went to 15, and he was buying.
But right, the markets enabled that because people were willing to lend money. Now I assume he's more leveraged, and he's raised his average price. And so I guess what I'm saying also is when I say
or 70.
Yeah, so let's just say Mike said 10K before as a possibility. Now again, no one knows if that could happen, but I guess the question is when I say too big to fail, I mean like the destruction in the crypto markets, if that happened, like would the government come out and save them?
Saylor himself, potentially not. I guess it depends on how vested Trump is in the market, but I don't really think there's a way to step in and save the Bitcoin market, and that's the beauty of Bitcoin. Bitcoin doesn't need anyone to save it. It continues on through hell and high water.
True.
Makes no difference. It's never been shut down. It's never had a circuit breaker. It's never failed. It's never needed a central bank to step in. That's why we buy Bitcoin. The price is fun to talk about. But I personally, when you say sell everything into inflating dollars, like, listen, I'm not a crazy person, but I would rather own Bitcoin down 50% than sell it all into dollars because I'm not selling it anytime soon. Yeah. Right? If it's money I needed, that's a very different, but as an investor, as a Bitcoin believer, I deeply believe in 4 years, 5 years, 10 years, even if we go into a bear market now, it'll be trading much higher than it is now. Going back to the gold conversation, I kind of agree with what you said. Retrace flies.
Right, yeah.
My base case is that it's not the same as the 70s and the 80s because the government, when Donald Trump speaks and Debasement speaks, I choose to believe them at this point. If we're going to grow our way of our fiscal problems, $37, $38 trillion of debt, that means print our way. Right. There's no growing out of that. That's printing your way out of it. And if you are going to purposely debase the currency, then I want to own gold and Bitcoin and other assets. And this isn't just me, by the way. We've been the crazy guys saying this for years. 2 weeks ago, JP Morgan, the debasement trade, buy Bitcoin. JP Morgan, Jamie Dimon has called it rat poison and said that anyone who touches Bitcoin will be fired. That Jamie Dimon, that JP Morgan. Paul Tudor Jones, buy Bitcoin, gold, silver, and the NASDAQ. He was the only one who included the NASDAQ. Right. Ken Griffin of Citadel. We're literally now talking about the Emperor and Darth Vader when it's like Ken Griffin and Jamie Dimon buy Bitcoin, gold for the debasement trade. So listen, maybe they're all like calling the top. I can see how that would be a top signal, but it's a narrative we've been saying for all of these years is now catching fire. And whether that means that we stumble at the finish line, or whether that's Bitcoin or gold or bonds, I think it's hard for me to get to deflation, as Mike talks about, without massive inflation first. Crack up, boom, hyperinflation.
So we had that. That's the key thing. I love Larry Lepard when he comes on.
Yeah.
He wrote the big print, and it's right. The point is we've just had the biggest print in our lifetimes, and that inflation we got to almost 11% in CPI. For that to repeat, with the stock market this high, you need it to continue. It's got to go up a lot. And it's all the lessons of history. Like there was a book written, The Price of Time, by Edward Chancellor. He pointed out all the cycles in history. And deflation is always the result of inflation. And that's, to me, I think the thing is happening. That's why I point out it's happening in China right now. So they are doing the big print. 300% of stock market, of market cap of debt to GDP in China. Their money supply is running $45 trillion, double what we have here, and their PPI is minus 3%, and their bond yields are 1.84%. So they're doing what Japan did. I mean, I remember trading these JGBs when they're starting to do it, and they're fighting that deflation, and also they have to export. Now everybody in the world is pushing back because they can't export to the U.S. as much anymore. So to me, that's what I fear, Scott. I think people are missing this recency bias. We've had the inflation. Everybody made, for instance, the total value of U.S. residential real estate's gone up to $60 trillion. That's up 50% since 2020. It's like never happened. That's pretty massive. The total stock market cap got up to $72 trillion. That's massive. It was just, it's up 50% in a few years. That's massive wealth creation and inflation. I'm just worried about just a little bit of reverse wealth effect.
But Mike, when you have Jerome Powell being bullied by the president to cut rates, and you know that even if Jerome Powell is stubborn, exactly what kind of person Trump is going to put in May, you know they're going to go as far back towards ZERP as they can before the next election, certainly, and that they're going to print their way out of this. How do we end up with deflation if we believe, maybe you don't, that there's going to be the big print? We may have just had the big print, but what our government has shown is there's always a bigger print.
One simple thing in this chart. I showed we've had the big print. We're at the highest stock market wealth creation in all of our lifetimes in 100 years. That has to keep going. And I think we're showing little signs of kinks in that armor as we get into 4Q. And it's got to start with the most liquid, speculative space with massive hubris and excesses and cryptos.
Yeah, but is there a world where you see gold continuing up with those bonds?
That's what. That's 70s type inflation.
Right.
Bond yields. That's 70 type inflation. That's what I'm worried about from gold. Is it's telling us it's the alternative. I think it's going up much more on deflation because gold rallies for two reasons: significant inflation or mostly deflation, currency debasement. Why do you hold gold when your currency is melting? And who's the biggest central bank on the planet who's buying? It's China, because they're deflated, and they're obviously trying to get away from the dollar. So the inflated environment would actually be good for people like us. Anybody who owns property and assets are above average income, it would be wonderful. But we just had the best thing ever. That's why I point out to me that's like, okay, that's what the expectation is, but as an option trader, is that the VIG? Is that, if you put in option positions, that's not the trade. The trade to get the 10 to 1 is tilting the opposite little. And that was part of my call on gold, but now gold's just so expensive, I'm just plain scared.
How do you print your way out of debt when you don't stop spending? Is that possible?
No, it's the old anti-fragile Talib who was one of the biggest Bitcoiners and now vehemently hates us, but still quote him. He talks about that you have to clear the brush in the forest to prevent a bigger fire, and if you have to start a small fire basically, and suffer through that, or you're going to have a much bigger fire down the road. We're just not clearing the brush. Right. So we're in a situation where we're not burning it away. We're not taking the small hits. We're not, as Matt Hogan joked on my show, and we talk about it all the time, he made a joke that governments have made recessions illegal. You know, like obviously sarcasm, but they pull the levers, they push the buttons, but they're not allowing the healthy corrections that we need or the excess to be flushed in between. So it means that the collapse comes. The funny thing is, every time we talk about this, I fully agree with Mike. It's just timeline.
Time is everything.
It's timeline and what will happen to my thing when it goes down, right? So that's really where we potentially disagree. I think we all generally disagree on the same thing. I mean, you were talking about it being good for us. Dave Weisberger says this every Macro Monday. They want asset inflation. They don't want consumer inflation.
Yeah.
And we've had both, right? So
How do you do one but not the other?
I don't think they really care anymore. I think it's a need to see everything go up come hell or high water.
I agree with you on that recessions are almost illegal, and you see that by the walkbacks, how quickly. I mean, I do think Trump, when he instituted the liberation tariffs, he was trying to be strong, and then the markets just pushed him to his limit, and now he's at a point where, all right, can't let it even more than 2-3% drop before I back off on what it is. And I think, by the way, I think that puts China in a much stronger negotiating position on this. And I think I was even reading that they know that he's not going to play hardball at this point.
It was the same with Doge, right? I mean, the market spooked him from the austerity and cutting out all the excess and such. Wants to see the market go up. He wants to see Bitcoin go up too. Like I said, I think maybe he can pull it off for a while.
So that's what I'm afraid of. Is I was hoping his team. Now the midterms are a year away, and every midterm we always swing away from the party in power. It's just the American way. This one I think will be more so than ever. Particularly a guy from Chicago watching the violence that's going on. People are going to say, yeah, he's a little bit too authoritarian. It's the American way to push back. I mean, that's the American. It's why we have our check and balances. But that's where I'm really getting concerned. Is why didn't he just let the thing go down and stay down for a little while and then respond organically, and then within 3 or 4 months before midterms you'd have that recovery. Now the risk is things are going to start dumping. I mean, unemployment's not going down, it's going up. We shut down the government, that's not helping everything. It's crushing government spending, consumer spending. It's the sentiment's all negative. I'm just looking at it right now, and we're at that time of year where years can happen in months. So I'm worried at some point when we go down, it's timing. When we go down, say 20% in most risk assets and stay down, that's massive wealth destruction. We're way overdue for it.
But stay down is the key, because we just had that, but got an immediate V-shaped recovery.
Right, and it's never going to happen again, right? Right, exactly.
It's
exactly.
It probably does happen and stay down for a while, right? I mean,
but it's timing. It's everything, as you said. Yeah.
And I would like to point out, I was just reading that last Friday, the biggest options volume day ever by retail. Retail bought the dip last Friday like crazy. Again, never before the amount of options volume that we saw. And again, as a kind of a pseudo-contrarian, that's something that concerns me. That means that people really do think that, it's down 2%, 3%, it's not going to go any lower, it's going to go right back up. And they've been semi-right. I mean, we've kind of chopped around a little bit, but it's again, timing, like you guys are saying, is everything, right? If we knew that,
well, that's why
owning our own island.
I put it gold and scary in the same sentence, because gold to me is telling us something. By the end of the year, if we can hover here, have the S&P 500 up 15%. But here's the thing I want to ask you is, the most significant commodity on the planet, crude oil, is down 20%. Why? Because there ain't no demand pull for crude oil. The whole world is having a problem because they're facing what's happening here. And that's happening with the stock market up 15%. Right. So imagine if we just get down 5%. That's dominoes kicking in. And that's what I'm afraid of. And as a commodity guy, I see pressure in all the elastic commodities except one major sector, and that's metals. And metals are being driven by gold.
Although even copper, copper has not rallied like many of the other commodities, right? The precious metals, at least.
It did for bad reasons. Supply constraints, initially the tariffs, and that's why copper now, I can show you a chart later, it bumped up 40%. This is I have to focus on U.S. copper because it's the center of the universe right now. It's not European copper. And now it's just hovering like about the same as the S&P 500 on the year. And copper has a very high correlation with S&P 500. So that's my point is the stock market has to go up. It's just a little bit of a trickle down. Today was another great day. We survived. That's why I think we're just on cliff's edge.
Amazing. All right, so Liz, why don't you get some questions for us or ask us some questions, we're here for you.
Absolutely. So what I'm going to do is, anyone who has questions, please come up here, and I will hand off the mic. You can ask our Mavericks a question. But in the meantime, I would love to leave this with you guys because I have some interesting questions for two of our Mavericks. One Maverick says, "Sell it all," right? Sell it all. Where would you buy? Where would you buy when if it comes back down? And we have another Maverick that says, "I'm not going to sell." At what point would you sell? And then I'll have everyone come, while they're answering. If you have a question, please come up.
Mike, why don't you start?
So
where do we buy gold? Where do we buy?
It's a simple answer for me because I'm not supposed to give investment advice, but you can never go wrong by saying just buy treasuries. You get 4%, you're locking in, and it's just a question of duration. If you move out in the curve to go long bond, which is right now about 4.6%, you could lose if yields go up, but if yields just catch up to what's happening in China, 200 basis points means on that kind of duration, you can easily go up 50%.
All right, so but let's dive into the risk assets, right? So, and we're just going to talk about Mike himself. So Mike's sitting there with his trading account, his investment account, he's in cash, except or treasuries. Stock market drops 10%. Do you buy?
So you're a trader. So this thing I have to. So I have compliance.
Right,
at Bloomberg.
that's true. And
I have to do
that.
everything,
So
and I can't do options anymore. And it's good because I watched your trading show earlier. Man, it brought back memories, Gareth. I mean, I lived that in trading. It's just, and I used to have hair. So I will admit, this is the longest. Last year, I'll admit what I did because of compliance and everything. For the first time in my life, I got out of almost all risk assets. I overweighted gold and treasuries. And my portfolio is just shockingly taking off. It shouldn't be doing that with no volatility. It's not. I'm scared because it's not supposed to work that way because gold's just shooting higher and all the precious metals. And this is the first time since I've been in the business I have not done a trade.
Wow.
I've never done it. It's just like, okay, something's going on here. I'm afraid. And I used to trade a lot.
Wait and see approach, basically.
Wait and see. But if it does go down now, if we get another, let's put it this way. Let's think what happens. S&P 500 drops 10% now. You're running through stops. What's Bitcoin going to do? 20 to 30%? What are bonds yields going to do? That 4% drops down to 3.8. This is the time of year. It's already past the time. I mean, we're going to start. I think that's why there's no tolerance for buying a dip now. It's over. It's too late. And that's why, so here's one thing, the Bloomberg Galaxy Crypto Index, it was up 30% in a year. We launched it because I said to launch it. I suggested it. I was so into it back in 2017, 18. It's hovering up around 5% in a year. So I look at it as a risk manager, anybody who has money in that trade, like, hey, your year's almost over. You want a bonus? You want to take a risk of losing? Just get out. So if it starts trickling down, I'm worried about a waterfall.
Wow. All right. So, Scott, tell us where, is there at any point, would something have to happen? Liz is asking, where you would start to say, I will, or have you, are there altcoins you've dumped?
Every day.
Oh, okay.
I trade altcoins to buy more Bitcoin, and I have sold Bitcoin many times. I'm not, when I believe that any investment, any asset, no matter how deeply you believe in it, I don't want to die with it. I want to enjoy the things that I have in my life, and if that means buying Bitcoin to buy a house that my kids can live in, I can't live in my Bitcoin, right? So I'm not like such an ardent, never sell person like that, but I would rather generally denominate my life in Bitcoin than in dollars when I'm saving. Spend dollars, save Bitcoin. And I've owned TLT since we started this show.
I remember.
When I bought it at the very lows, like around 84, I'm perfectly comfortable holding that and riding it. And I have definitely sold plenty of tech stocks over the past month.
So, in regards to that, you have I'm assuming you kind of have a core Bitcoin position, but then you'll also trade around the Bitcoin movement.
Very little. So these days, actually, I have everything running algorithmically with these guys, Arch Public. I don't know if you know them, and it's just an exceptional product. And I've set up basically 12 algorithms that utilize Ethereum Solana volatility to earn a cash yield and buy more Bitcoin. So basically, I'm buying Bitcoin. It just does it much faster and better than me. Absolutely, as I said, I was at dinner on Friday night, didn't know what was happening, but I was making a lot of money and buying a lot of cheap Bitcoin. It's great, right? And so, I set all the parameters, I worked on it for a very long time, And so, it buys dips on Solana and ETH, sells the bounce up, and then moves it basically into Bitcoin on the dips. It's been an incredible tool. So that's how I do it now, so I don't really have to think. But yes, my goal is to accumulate more Bitcoin using these other assets, and pretty much any other asset I would sell to.
Is there going to be any sort of, I feel like we really haven't had a true altcoin season.
I don't think it's
You
coming.
don't think, is that over?
So I think the altcoin seasons of the past are over.
Okay.
So there's a few caveats. I've been saying since before Circle's IPO, but certainly after it, that altcoin season happened. It just happened in crypto adjacent equities. You watch what happened with the treasury companies. We get the same Christmas tree charts that we saw for years in altcoins. Massive pump, massive dump, all the way back to zero, traded at a discount. We're playing in a much bigger pool with much bigger money now, buoyed by the president and his family trading it as well. There's a lot of money to be made by seeing things go up very fast and down very fast, as we've seen in previous alt seasons, which is just basically a game of hot potato, right? People fantasize about the old days of alt season, like that ex-girlfriend that you hated, but now all of a sudden you're thinking about how amazing she was, because you don't. Alt seasons were like a month at a time,
Right.
and if you weren't back in Bitcoin immediately, nobody made money on them, right? So it's really a trader's thing, and we've seen that, I think, across public equities. We've also seen pockets of altcoin season. As Mike likes to point out, there's millions of altcoins now. So it's not a situation where you're going to be able to throw a dart like you used to and just wait a week and your thing goes up 10 times, you sell it and you throw another dart and wait. The BNB ecosystem recently had this massive move, right? Binance Coin went up to new all-time highs. It's outperformed Bitcoin on almost every time frame. And then the ecosystem around it, meme coins started launching, but it happened for 2 weeks, right? And we've seen Solana's ecosystem go crazy and meme coins go crazy. So there's been these little speculative alt seasons, but you've had to be exceptionally nimble and really on top of it to catch them. I haven't. I didn't participate in Trump token or anything. I think the dumbest thing in the world. But and it's clearly a sign of excess, but the thing is it's not happening as much anymore.
Right.
I do think there was a point where I was getting very concerned that we were back to the speculative GameStop nonsense of the past, but it's calmed down a lot, at least in the crypto market.
Interesting.
Awesome. Those are great answers, guys. Well, if we don't have any questions from the audience, I think. Oh, yeah. Yeah, come on up. I'll pass you the mic over here. Oh, yeah. Of course, come on up.
You're live on TV now.
Live, yeah. Come on.
Mike, it's your nemesis.
Tony's awesome. Tony, come on, step on it.
Oh, yeah.
Here you go.
Tony, you're great.
I'm going to ask a very simple question for all three of you gentlemen to respond to. Long-term, speculate on the future of the dollar, up, down, or trading range.
Versus what?
Versus what? Oh, God.
Jinx.
The euro. The euro.
Because I think the dollar's the what is it, the cleanest shirt in the dirty laundry or the prettiest pig in the pen, right? If the dollar goes, we're really screwed. So I think the dollar outperforms potentially other currencies, but still is underperforming when you benchmark it to something like gold.
Gareth,
Well, I got to go. I'll have to jump up here and
Come on,
show
you
a
got it.
chart here because at least over the near to midterm, the euro has broken out against the dollar, right? So what we see here is by the way, this goes back to the financial crisis highs right up here, right? And so you have this beautiful downsloping trend line, high pivot, high pivot, high pivot, right to here, and then look at what has just happened, the euro against the dollar. And so usually when you get these breakouts, it's not just like, oh, let's just go up here and then we're done. This is usually, especially when it goes back literally, 17 years or so, 18 years, this is the beginning of a bigger move. And so I would take the other side, which is...
Well, can I revise my statement?
Sure.
Because it's always about time frame.
Right, time frame.
I think right now the dollar is going to like 89 or 90 on the DXY, and then I think it starts to outperform. So it's about time frame. I think in the short, I 100% agree with you in the short term. I think that they're going to debase.
Do you think that the debasement is, so are you in the camp that all currencies are going to get debased and it's just the dollar's the cleanest shirt, essentially?
Yeah.
Okay, so you think the euro eventually, they start to do the same thing, massive printing, and then yen, same thing.
Yes,
and Mike,
so.
what about you?
Well, I can show one chart. First, I want to point out from a crypto standpoint, the dollar is unstoppable, and Trump figured it out.
Stable.
I mean, stable coins. It's just standing like I am in front of you now in Hong Kong, 2018. Huge bear market in cryptos, and there's one thing going up. Tether at the time was $2 billion, and it was going up. I mean, the market cap, I'm like, all right, that's a bull market. It's that technology is awesome. But the key thing, so I think cryptos, and the world's finally getting it, when you can get access to the dollar via your phone, what does that push back on? Peer-to-peer cash or Bitcoin? Well, I can do it from the dollar, and I don't have to deal with volatility. There's 130 currencies on the planet. Really, you probably don't need that many. Maybe we need 30 or less. I can get the dollar through my stable coins now, and it's happening organically. So that's the part of cryptos I'm so bullish on. It's just speculation on that. But I want to show you one key thing about the dollar. If you take the Fed trade-weighted broad dollar, you overweigh that with the S&P 500, divided by the rest of the world, it's the same trade going straight up. Now they're showing some divergence. That's the key problem with the dollar now is it's just a part of the whole world needed access to the U.S., access to currencies, access to our real estate market, access to our stock market. Why? Because it's going up. And what happens? If the stock market starts going down by the rest of the world, it's what's starting to do. That's why gold's going up. That's a problem. So overall, to me, it's a great macro trade, but let's remember what drove the dollar. The rest of the world getting the U.S. stocks.
Amazing.
So it has been. So what happens there is I'm afraid. That's why I'm worried about this gold handling up and the dollar going down. I mean, gold gets it.
All right.
All right. Anybody else have a question from our audience? We're good? All right. Well, if you have any questions and you're watching on YouTube, please listen below. We'll get to them and ask our Mavericks. But thank you guys so much for being here. Again, this is a special edition. We're live from Orlando Money Show. But usually you can catch the Mavericks on our Verified Investing page, our YouTube page, every Thursday at 3 Eastern. So thank you guys for coming all the way up to Orlando and having our show out here. We appreciate it. Is there any final remarks you want to say?
I think overall we've covered some good stuff, and this is the first time I've had the pleasure of being with Scott.
We had him on a screen,
but
we had him on one of these screens.
I tried.
Like
he was there.
Here, so it's pretty good to have you in person, and we'll have to do this again, maybe at our studio in Tampa. I know you're now in that vicinity, and we'll just have to drag you up.
Well, thanks for having me. This is a lot of fun. To me, this is a show and tell part of the game that's just too much fun. So thanks for having me.
Amazing.
Absolutely, guys. All right, well, thank you guys for tuning in. We'll be back on next Thursday. Talk to you later. Take care.